Hey, it's Chris. Just wanted to send out a quick message. So if you are looking to buy or to refinance, or if you are a real estate agent and you've got clients that are looking to buy or even to refinance. So interest rates are crazy right now. Yes. They're kind of toggling back and forth, but credit scores are so important right now. So if a client has below a 640, you're getting hit with not only a higher rate, but you're getting hit with points. And so kind of looking at, okay, do I do conventional? Do I do FHA? So on and so forth, or whatever. What is the best benefit for the client? And totally that's what I do every day. But if your credit scores are below a 640 minimum, and even now I'm saying like below a 680, but I'm seeing 640 all over the place, below 640, 660, you're paying points. And so that's the world that we're in. So if you're buying, then definitely you need to look at what monies, give me a call. Let's look at what monies that you have available for your closing cost. If you're buying, do you ask for a seller concession to help you with those closing costs so that you can get into that house and it's more affordable? If you're refinancing, then we roll those in, but we still have to look to see, what makes sense to do for you as well. So if you have lower scores, then definitely look and see, do you need to pay some credit cards down below 30%? No more than $5 or $10 balance. Look at those things so that you're prepared and your credit is as high as possible. Because again, that's the world that we're in. That is online with the retail banks, the banks that you hear all the time, all of that kind of stuff. I'm still meeting and beating their rates and their points and everything else all day long, usually. But I just wanted to get a message out there. If you are below even a 680, and this is with a mortgage credit report. So if you're seeing yourself on Credit Karma and all of that below, I would even say 700, check and see what you need to do, to get that score up as high as possible. Some people I'm having to put into an FHA, but we've got a plan. So our plan is that after they get into the loan, we do what we need to do to get into the house. We may have a higher rate, whatever, but we are marrying the house, dating the rate. So also we're dating the program. So if we have to close with an FHA loan, we're refinancing into a conventional after the fact so that we're in the home with least amount of, with lesser money. The payment is still it's not semi-affordable. It's got to be affordable to an extent. Otherwise you can't get into the home. But also the FHA mortgage insurance, talking to a client today, the mortgage insurance on a particular deal is going to be $82,000 over the life of the loan. So we're definitely working on credit after we close. We're still working on credit, and then we're going to be refinancing them out of the FHA. That makes sense. Totally makes sense. So sometimes people have to get into an FHA in order to get into a house. Absolutely. But you need to make a plan, make a goal, look at your credit, see what's going on. Always make a plan for the future. This is your future home. If you're, living there now, this is your home. So be smart. If I can help you, give you any kind of words of wisdom, whatever, all that kind of good stuff, I am here. Just wanted to send this out and say, oh my gosh, pay attention. Okay, talk to you later.